What does this mean? I read this. Nailing your payroll amount for your S corp.
Yeah, that's called basically easiest way to explain that is your payment, your compensation optimization. So if you have Social Security tax, basically is what we're trying to minimize. And so the IRS, it has to be a reasonable compensation. Okay. So if you have, let's say, I don't know, let's say 400,000 net income in the business, and you're paying yourself like $250,000. And we look at your business and go, okay, let's think of a business. You are a painting business owner.
Okay.
Right? And the average painting business owner.
Because I used to paint for a living.
That's right. Yeah. You did. And you do a good job. Because you painted Taylor's.
Oh, that's right.
You painted Taylor's house.
I did paint Taylor's.
I think you missed a spot on one spot, but that's okay. I mean, you can't
Somebody smudged it. It wasn't my fault.
You can't be as perfect as you used to be. You're getting old. It's been, I mean, there's a lot of
older.
So reasonable compensation. This is restructuring your compensation, and it's you're basically trying to pay a reasonable compensation. What does a painting business owner typically, make? What's the president of a painting business make? Right, and then let's say the salary is $70,000. I don't know.
Is that it?
I don't know.
Okay.
I don't know what it is. I don't have the. I'm not looking at the data.
The painting company. I'm only making 70.
But there's actually.
I need some better workers.
We use what's called a reasonable compensation report. It's not just made up numbers. So we use a report and we pay a fee for it. Of course, it's not free. Nothing's free. And we go in and look at, okay, so you're the painting business owner and it's $85,000 a year. And the difference, you were basically paying the most amount of tax. That might save, I'm trying to do the math. It might be a $14,000 tax saving. I mean, it's pretty significant, and that's every year, right? Because you're lowering what you're putting into FICA, right?
Right.
And so, but you are being reasonable. What's the opposite problem is when business owners come in there, they have an S corp and they're like, yeah, I'm
taking 90% of the profit.
Well, they're all of it. They're not even paying themselves a salary. I'm like, you are, when you get an audit, if you get an audit, you are going to have to pay so much money back in tax and penalties and interest because you're not being reasonable. So there's two sides of the coin, right? Who
defines what's reasonable? The IRS.
Well, no, it's just, so if the average painting business owner is making $85,000, you better be paying yourself. If you're making $400,000 net in the business and you're paying yourself $10,000, that's not reasonable.
Right.
But then you're also paying yourself too much because the average business, doesn't make $250,000. You just happen to be doing really well. And so you need to pay yourself. And that saves on FICA tax. And that's a tax strategy to kind of minimize the tax.